Moving forward with our project here on the third part, specific data to look for when analyzing major economies. And as you know, what we are doing here, we are trying to analyze, to look at the indicators that characterize an economy. Now it is time for the United States of America, but we'll take a look at Canada as well, Eurozone, Australia, and United Kingdom. The most important economy in the world being the United States. There are a lot of indicators there to be watched, and market is highly influenced by the moves in those indicators. So there are something like 27 or 28 indicators to watch and to be aware of the release date. What do they mean? If the indicator is a first-tier data or a second-tier data, if it brings volatility to the trading market, and so on and so forth. So without bearing in mind that and without looking at the economic calendar, you might end up trading in the wrong time, in the wrong session, and looking for volatility when actually there should be no level of volatility to expect. Now this is University of Michigan Consumer Sentiment, and like the name suggests, this one is a survey made by the University of Michigan, and it consists of asking respondents to rate the level of current and future economic conditions. Based on their answers, the index is composed and released. Higher values than the forecast should be positive for currency, while lower values than the forecast should be negative for the currency. This goes lately, like suggested here many times, this goes lately more with the risk on, risk off environment, not necessarily with positive or negative for that specific currency. It is important for traders as it brings into discussion financial confidence, which in turn is a leading indicator for consumer spending. And the consumer spending, we all know by now, is the very engine of economic growth. Lately, the indicator has coming with higher values. You will see that by the time we are looking at the 6 month worth of data, and especially for the last 3 months from May till July, it has values way above the 80 level, indicating strong consumer sentiment and confidence. Now, in this environment, and with this I will end this short introduction, with this environment in which the Federal Reserve injects $85 billion on a monthly basis in the US economy, with the aim of improving the US economy. Now such an indicator like the Michigan Consumer Sentiment, or actually all the consumer sentiment indicators are important, and such higher values may suggest that the economy started to pick up. Now let's look at some more details regarding the University of Michigan. Well, it is released by this university, and there is in fact a composite index based on surveyed consumers. Now there are about 500 consumers that are being asked to rate the relative level of current and future economic conditions, and based on the result, the index is composed. And if the actual it is higher than the forecast, it should be good for the currency. And if the actual is lower than the forecast, it should be viewed as negative for the currency. I would say for this release, not like in the PPI or the CPI to come, I would say that for this release is more likely good for the risk on environment, and good for or bad for the risk of environment. So look at this release most likely into this way. It is a first year data in the sense that market tends to be volatile surrounding the release of this University of Michigan, especially if the actual differs most than the forecast. It is important for traders because it brings into discussion financial confidence. Now, financial confidence in turn is a leading indicator for consumer spending, and you know the saying under this project. So if you don't have a consumer that spends, then you do not have jobs, and so on and so forth. So a healthy economy is based on a consumer that is spending. Without spending, basically the economy is in impossible mood to grow. The University of Michigan Consumer Sentiment comes in 2 versions, and this is extremely important. They are being released 14 days apart. So on a monthly basis, they are being released 14 days apart, the preliminary and the revised consumer sentiment. Now the preliminary tend to be the most important, and it has the most impact, as it offers view in the real final number. The revised consumer sentiment may also bring volatility if it differs mostly than when compared with the preliminary, but this is happening extremely rare. So watch for the preliminary Michigan consumer sentiment to bring the most volatility, and watch for the revised number to come in line with the preliminary if everything tends to be under control. The release date, it is being released on a monthly basis around the middle of the current month, and the release time is 13:55 GMT during the North American trading session, of course. So 13:55, not 14, not 14:30, but 13:55 during the North American session. It is a first tier data in the sense that it brings high levels of volatility to the market, and that should be taken into account. Analyzing the past 6 months like we did with each and every indicator under this project, and we are seeing that from February to July 2013 we are having actually higher values for the consumer sentiment as it is calculated by University of Michigan. And as you can see, on each and every month on the past 6 months we have 1, 2, 3, 4, 5, 6 months with values over the 70. So almost 75 for February, I don't know, 72 for March and April, and then with levels over the 80 levels. Now this bodes very well with the talks that the Fed is going to taper in September, or at least not, if not in September, in this coming years. And because the economy started to improve, we've seen some important indicators under this project so far. This is the 13th indicator, but we've seen some important indicators like until now, and this pointed towards improvement in the overall economy in the United States. So look for Fed to actually try to taper the quantitative easing with this fall based on this healthy data. This one, for example, looks really good. Now next we're going to move to the Empire State Manufacturing Index on the next recording. And the Empire State Manufacturing Index, it is a survey, you will see, and it is based on interviewing manufacturers in the New York area, this being one of the most important manufacturing areas in the States, and it is being viewed as a benchmark for the whole manufacturing sector in the United States. But that will come on the next recording. What to keep in mind on the University of Michigan consumer sentiment is that it is released monthly. It comes in two versions, 14 days apart, preliminary and final and revised. The preliminary is more important, release date 13:55 GMT on North American trading session. Stay tuned please for the next recording. Moving on with the Empire State Manufacturing Index.